Hi, everyone. Today, we'll talk about the Donald Trump indictment. Since everyone's talking about it, I'll give my 2 cents. Then we'll go over the PCE data, something much more relevant. Then we'll go over these ridiculously aggressive charts. Then we'll go over my results for the day and my thoughts going into Monday's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Donald Trump finally got indicted. There's been a lot of talk about this, and it's over the hush money that he paid to Stormy Daniels. They say he was indicted regarding the $130,000 payout to Stormy Daniels in an attempt to buy her silence. And basically, he's going to fly to New York to hear the charges at the official indictment. Allegation is basically that his lawyer, Michael Cohen, paid $130,000 to Stormy Daniels, and then he later reimbursed his lawyer for quote-unquote legal fees, which is effectively a misdemeanor because it's not actually legal fees, it's falsifying business records, allegedly. And then the prosecutors are taking it a step further that this is breaking election law because it's an attempt to prevent the voters from knowing that he had an affair with her. I think this is a little bit tougher call because basically everyone understood that he had an affair with Miss Daniels. She did go out publicly multiple times and tell the world that she had this affair. So this might be a little bit tougher to validate, but it is one of the allegations here. And then they mention the fact that if he did falsify records, that would be a felony, which is a more serious charge. They do mention here that either way, this is by no means a clear-cut case, and that there's little precedent for a prosecution quite like this. And really what this highlights is this politically motivated? And what is this going to do to the country? Is this going to make Mr. Trump a lot more wealthy by raising money for his campaign, since he is running for president once again? Is this going to motivate his voters? And overall, is this generally just going to split up the country more? Certainly remains to be seen what happens ultimately, but what we can definitely know is that Mr. Trump is going to use this as a way to raise money and promote his campaign. Moving over to core PCE and regular PCE month over month, you can see core PCE was 0.3 versus 0.4, better than expectation. Same for the year over year number, 0.1% better than expectation. Regular year over year, 0.1 better than expectation. And then month over month, 0.2% better than expectation. You like to see it. Personal income, 0.1% higher than expectation. And spending was down a little bit, 0.1 versus the 0.3 expected. Overall, this is a good report, and really, I think this is what drove the markets. The Fed has mentioned before that PCE is a good indicator to them on what inflation is doing, and basically this is saying that inflation is coming down and that they can be a little bit more dovish going into the future. Moving down and looking at the Michigan expectations, 5-year inflation still saying 2.9%, which is interesting. Consumer sentiment lower than expectations, current conditions also worse than expectations. And then their March inflation expectation here, 3.6%, better than the 3.8% expected. So overall, pretty good on inflation, but a little bit worse than expectation on consumer sentiment. And just for notes here, surprisingly to me, this barely moved the needle at all here on the Fed futures. You can see, looking at yesterday's numbers to today, it's basically identical. Moving over here to the charts, starting off with the S&P 500 on the 4-hour and the daily chart. You can see we gapped up slightly and then rallied super aggressively throughout the day, finishing up at 409.49, just short of that 410 level that we talked about in yesterday's video. I didn't think we were going to get this high, but it certainly happened. You can see that powerful green bar here on the daily chart, getting very close to the resistance, up at 410.95, 411. We filled the gap going back to 16 February. So right now you have to be looking at that 410.95 level at the trend line. Certainly could go a little bit higher on Monday, maybe 411.37. And then beyond that, we have the next trend line at 413.55. So right now, 2 price targets. If we do get a bit of a pullback, probably looking down at 406.47 at the trend line and then get the continuation. Everything looks super bullish, not overbought yet here on the daily chart. 4-hour, super overbought, which is interesting. Might see a little bit of a short-term pullback, but everything is still super aggressive. Looking at the 12-hour chart, even the 12-hour is overbought here. You can see those trend lines up there. A little bit of room to that upside, much stronger today than I thought, but nothing goes straight up, and this has been super aggressive for 3 days, and we might see a little bit of a pullback on Monday, but definitely watch the charts closely before getting short. Moving over to the Qs, similar thesis. We broke through all of these trend lines that I was watching. I thought this might be a rising wedge. We broke that. So we're now in a little bit of a channel. Upper resistance is much higher. Watching that 321.82 level. And then just above that, you can see we have 324.70 at the next major trend line. Looking at that level on the daily chart, you can see we have basically the shadow of the most recent high. We broke the lower trend, looking at that upper trend. And then if we get above there, then we're basically looking at 334.42. So that's going all the way back to the August high. And this next level is looking to fill the gap going back to 19 August. Which based on what we've been seeing, looks like it's going to happen just above this next trend line that I'm watching. Moving over to the Russell and the Dow on the daily chart, similar thesis. You can see we came into this lower trend line, tested that level, 178.54, stopped right there, got a little bit of rejection, looking to see if we push up to the next level at 180.51, right at the 144 EMA, and just behind that is the 200 SMA here on the daily chart. Everything looks bullish here on the Russell still. Obviously much less strong coming off of this base versus the NASDAQ, but still looks pretty good. Momentum, bullish. RSI, still bullish. Moving over to the Dow, similar thesis, tested the 55 EMA and the downtrend line, broke through those levels. Now you have to be looking for a push up to the area of next highest volume, 338.79. That looks like a good level. We also have the low from this consolidation sitting at 336. So a couple of levels to the upside, 1 to 2% more potentially, as long as this continues to look strong. Like I said, this is super aggressive. We gap up, rally. It's not going to go on forever. We eventually will get a turnaround. So keep an eye on that, but definitely don't trade to the downside until we start getting some real indicators. Moving over to Apple and Tesla, similar thesis, broke out of all the trend lines here on Apple. Also filled the gap going back to August, just like the NASDAQ. Looking to this dip level going back to mid-August of last year, sitting at 167 is your next level of upside potential. And then above that is 170.90. Again, overbought here on the daily chart, slightly lower RSI read versus the February read, which is interesting, but you can't deny the prices. We're continuing higher. It's been super aggressive, so you have to continue to respect that until it stops happening. Similarly here on Tesla, got through that 203.80 level, looking up to 214. And then just behind that, we have the 200-day moving average at 215.82. Certainly looks like we're going to get a test of that level. It's right behind the trend line there at 214. And then above that, we have a level at 225.50. So looking for the 200 SMA as your next test for upside potential. Momentum, bullish, RSI, bullish. Everything looks good going to the upside here on Tesla. Moving over to Amazon and Microsoft on the 4-hour, similar thesis, continuing their rally, looking very strong. Maybe they get up to this 213, most recent high. That would be interesting. Otherwise, looking at 107.28 as your next level. Moving over to the daily chart, Microsoft, just so we can see where we're potentially going. We have the August high here sitting up at 293.82, 294. That looks like your next level, sitting at 288.35 right now. So just a couple more dollars to get to that August high. There's going to be tons of sellers in that level. Very clear top here, so keep that in mind. You could certainly see prices gravitate to that level. And then once we hit there, it's going to be interesting to see what we get across the markets. Key level here on Microsoft, one of the biggest companies in the world. I'm sure everything else will be hitting critical levels at that point as well. And then we'll see what happens after we get into that zone. Otherwise, everything still looks bullish, very strong. Momentum, bullish, RSI, continuing to overbought conditions, but still strong. And Amazon, similar thesis, but a little bit less strong. Moving over to staples and discretionary on the daily chart, basically both of them are pushing aggressively to the upside. We hit that high from 1 February like we talked about, paused basically at that level. After that, looking at 75.40 to the upside. Moving over to discretionary, we cleared the zone, looking up to 152.03 for your next level. And then above that, we have 154. Things bullish, everything momentum and RSI, everything looks good to the upside. Hard to point out which one is doing better here because they're both moving so aggressively to the upside. Moving over to yields, you can see they both rolled over a little bit. 2-year, a little bit less than the 10-year, so we're still very inverted. Haven't really seen that inversion start to level out. Realistically, I would like to see that start to calm down, but it's certainly not happening quite yet. A little bit of weakening in yields, a little bit of rally in markets, definitely something to watch. 200 SMA still acting as support on the 2-year, and then look to the next level of downside around 3.42 on the 10-year. Moving over to transports just for a moment, really just to highlight that transports are participating in the rally. Everything looks good, momentum very strong, super bullish, RSI super bullish, strong day. Looking to the 55 EMA here on the daily chart at 229.71 as your next potential level for rejection. Above that, then we're looking up at 234.50, so quite a bit of upside potential still. Got through this most recent midpoint low, looking at the 55, and then maybe a little bit of resistance up around 232, but otherwise still looks very bullish. Moving over to the dollar, looks like we have a bit of a double bottom forming here, which is interesting. Yields pushed down, dollar rallied. A little bit weird there. Usually you want those to move together, but otherwise finding a low, finding some strength. But we do continue to make lower lows here. If this is going to be a lower high, it really has to happen now. Otherwise, if this is going to reverse that higher high form and then potentially a higher low, and then we'll see what happens. Looking up to that 103.64 level as your next resistance. To the upside, similar to the 55-day moving average at 103.37. Moving over to high yields. Again, similar to transports, not much to say besides that we're going much, much higher. Looking at $93 as your next upside. You have some trend lines up here at 93.20 and 93.50. Then we have a key resistance at 93.67. RSI overbought. Daily RSI, super bullish. Momentum, super bullish. Tons of volume here today as well. Everything looks good going into Monday. Moving over to TLT, similar thesis, rallied super aggressively, hit the 200-day moving average and stopped right there. Looks like a candle break continuation type setup, potentially up to 107.30, maybe the recent high 108. That would be interesting. If we can get above the 200-day moving average and stay bullish and hold above it and get the continuation, then it looks like TLT might be pushing up to those price targets around 110 or 115. So overall, still super bullish momentum, and we're above the SMA here on the daily chart. So everything looks good here on TLT. Moving over to the VIX here, you can see we got down to that 1855 level, very close to the lows. The low of day was 1852, close to that 1850 level that we talked about. Momentum basically zero at 12-hour momentum, still stepping in the bullish direction. So keep an eye on this. Still could get down to maybe 1820, 1815, like we talked about in the last video. But right now, you have to look at this as kind of a falling wedge, and we might see a little bit of a push back up to this next trend. And then if we see a breakout from there, that might point to some much lower prices in the short term. Like I said, nothing goes up forever, and we've been going up super aggressively. Lots of overbought readings on RSIs all the way up to the daily chart on some charts, so keep that in mind. But again, you have to play the bullish side until it starts to show us that we're not bullish anymore. And this is something to watch as a potential trigger to start getting short if we do start to see some breakouts on the VIX. Moving over to my results. Did I trade well? Absolutely not. But I did hold my bullish positions. I did sell some uncovered calls here at 321. So we'll look to see how that plays out. It's all the way out on Tuesday of next week. So we'll see how that plays out. I was really trying to buy some shares here today. I sold puts all the way up to the 320 level, but the market continued to rally super aggressively. I have some 318 puts for Monday for 64 cents, looking to get a little bit over $100 on that position. I'll continue to roll these up as long as the markets continue to move aggressively. I'll look to sell some Tuesday puts as well on Monday, as long as everything still looks pretty much like it does right now. Looking at the IWM, I rolled this position out to the 177 on Monday for a 71-cent credit. Small profit there already. Still holding this covered call here on XLE. Still looks good. Couple of bucks profit there as well. Overall, not too bad, about $180, and a pretty good overall trading week for me. In terms of Monday, like I said, still trading bullish. Everything still looks super bullish, but we do have to be careful because we are so extended right now. Certainly could get a little bit of a reversal, and it might be pretty aggressive just because of how high we are right now relative to where we have been. Definitely check out the Sunday video where we go over the longer term charts to make sure we get a good picture of where the monthly close was as well. Let me know down in the comment section what you think of the PCE data and what you think of this rally. It's been super aggressive. I don't really care what you think about Trump. It's just big news right now, so it is what it is. Otherwise, markets super aggressive, still making higher highs, and you have to respect that. But is this going to go on forever? Are we just going to go to the moon from here? What do we think is going to happen? Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.